2025 confused a lot of people. We didn't get a crash like a lot of folks predicted, but we didn't get a boom either. I, for one, was expecting stabilization and instead was met with trepidation. Would-be buyers felt insecure in their jobs, and a lot of would-be sellers didn't get the price they were looking for and pulled their listings. And the data across the nation was mixed bag too. GDP technically grew, but unevenly. And the labor market softened, which isn't necessarily good, but inflation dropped, which sounds like a good thing, right? But falling inflation is not the same thing as decreasing prices, which is an important distinction, especially when we're talking about real estate. In this video, we'll chat through what happened in Houston in 2025 and what our best market experts are predicting for what we'll see in 2026. Hi, my name is Carolyn Bauerschlag, your friendly neighborhood realtor right here in the Houston area, and I've helped hundreds of people just like you relocate from all over our country right to our great city. And if you're thinking about moving to the area, I would love to add you to our client family. Let's chat about Houston in 2025. More homes sold last year than in the prior year, which is technically a good thing, but we did see prices fall by about 1 or 2 percentage points. Why is that? Well, what we saw in Houston in 2025 was more homes listed than in any other year. Unfortunately, 2025 was a record-setting year for the number of homes on the market at any given time, and at certain points in 2025, that crested above 60,000 homes. Now, for reference, in the lowest parts of COVID, we only had 19,000 homes on the market. But for most of our normal pre-market, pre-COVID years, we had somewhere between 38,000 homes on the market at any given time. Now, with buyers having that much choice, it really is actually a blessing that our prices only fell by 1 or 2 percentage points. And we do have a robust Houston economy to thank for that. So while things didn't feel overly great and while buyers didn't feel overly secure, what we didn't see in Houston was massive job loss. So we did see buyers come out of the woodwork and choose to make purchases, but with less enthusiasm than in prior years. Now, excessive amounts of inventory isn't all that bad. If you're a buyer right now, you have more choice than ever in the greater Houston area. And that probably sounds pretty good to you. If you tried to buy in 21, 22, or 23, you knew that you were going to get crushed by overwhelming amount of demand, right? So a little bit of a reprieve in excess inventory is actually quite good in rebalancing our market. And demand in Houston was propped up by a robust economy. The truth of it is that Houston is more insulated than other cities might be. Houston is diverse. We have manufacturing, distribution, big pharma, tech is starting to come into play. We're not just a one-trick pony with oil and gas anymore. So even though we did get hit with a ton of amount of choice, buyers are still enthusiastic and able to buy due to the diversity that we have in our city economically. Now in 2025, the profile of the type of buyer we saw in Houston changed dramatically. For instance, the age of a first-time home buyer edged up past 40 years old. That used to be something that was in the mid to high 20s. And on the opposite side of that spectrum, we saw a ton of cash in the marketplace. People purchasing in luxury price points were doing so with cash, and they were unencumbered by things like financing concerns or the crush or the daily grind of your average bills. And perhaps the group that took it the hardest was my core client. This is going to be your dual income earner, maybe with a child or two, who has a car note, maybe some student debt, some monthly bills, and probably an existing mortgage. And this is your prime upwardly mobile buyer who's caught in a horrible unaffordability trap. Time and time again, I heard the same story. I have a 3% mortgage and don't want 6.5% debt. My down payment is tied up in my current home. I don't really feel safe in my job right now. Maybe things will be better next year and I'll feel a little better. And that brings me to my predictions for 2026. I'm going to share with you some of the highlights from the chief economist from Compass Real Estate and Houston Association of Realtors, the Mortgage Bankers Association, and Fannie Mae. All of these thought leaders agree that 2026 should show modest improvement in the total number of homes sold, both nationally and here in Houston. Now, nationally, we're expecting about a 4% increase in the total number of homes sold, which would bring us to about 4.25 million homes. Now, in pre-COVID years, we saw about 4.8 million homes sell in a given year. And in COVID years, we saw up to 6 million homes sell. So if you consider that 4.25 is still about 500,000 fewer buyers than in a previous pandemic year, it's not bad, but it's not great either. We're still kind of edging back up to normal volumes of transactions happening. Now in Houston, we're expecting approximately 5%-ish more homes sell than in the previous year. And here in Houston, we did see modest unit growth over the previous year for what was sold. So all things equal, we're not expecting a gangbusters amount of homes to sell relative to the prior year, but we are starting to see people say, hey, you know what? I think it's time for me to get off the sidelines. Now, more home sales is a two-part equation, right? You have to have more homes on the market and you need to have more buyers buying those homes. So nationally, we are expecting to see inventory edge up, which isn't necessarily good if you're a seller here in Houston. So if you are planning on putting your home on the market in 2026, it's imperative that you pay attention to what the advice is that your realtor is giving you for pricing, positioning, marketing, all of it. You are still likely to compete with quite a few of your literal neighbors to get your home sold for a smaller pool of buyers, right? Like we're not dealing in no buyers, but we're dealing in buyers who are still extraordinarily price sensitive. And the reason that those buyers are still going to be price sensitive is that all of these industry leaders and experts agree that the bright line for interest rates for 2026 is going to be right along that 6% to 6.25% for most of the year, right? So if those rates track along that line, that's not meaningfully different than what it's been for the last 6 months. But it's important to know that buyers don't just move on facts, they do move on feelings. So more than anything with interest rate changes, we don't need the interest rate to drop so much as we need buyers to feel confident in their own economic circumstances. So my sincere hope is that we see people feel more stable in their jobs and more assured that they can make major moves and be okay financially. And all of those factors really bring us to pricing. That's the thing that everyone cares about. What we're expecting to see both nationally and locally is about a 0.5 percentage point increase in the median and the average sales price. Now, a 0.5 percentage point is far below the 3 to 5% that we typically see, but we're going to call a 0.5 percentage point gain a massive win. When you consider that inventory is increasing and buyer demand is more or less stable, not seeing prices come down would really be a great thing. Now, what's putting downward pressure on all of this is that we just have persistent unaffordability issues. Remember that affordability is an equation that's made up of three things. It's made up of a buyer's income, it's made up of the interest rate, and it's made up of the price of the home. Now, as I mentioned just a moment ago, we're not really expecting interest rates to change dramatically, and the labor market might get a little better, but it's still kind of sluggish. So that just leaves price. But what industry experts agree on is that in order for price to meaningfully improve affordability, prices across the nation would have to be lowered by 30% in a single year. And that's just unlikely to happen, right? We're not predicting any major collapse of pricing either nationally or locally. And this is something that I really want every seller to be keenly aware of when they're considering what they need to do when they price their home. As it stands at this moment, the amount of income that's being allocated towards principal and interest out of a buyer's median household income is 42%. And 42% is exorbitant. Imagine in a given month, you receive 2 paychecks, you hand one over entirely almost straight to your mortgage. That's crazy, right? And the last time that we saw these levels this high was in 2005, 2006, as in the last real estate boom. And previous to that was in the 1980s, when you hear people talk about interest rates being 16, 17, 18% at that time. So more than anything, I want people that do have the longer view in real estate to put aside that saying of interest rates were worse when I was coming of age. Interest rates in the 80s were terrible. That's true. But median household prices were only 2.5-ish, maybe 3 times people's annual salaries. What we're dealing in now is that nationally, most home prices are 6.5 to 7 times what people's annual take-home pay is. If you consider that the downward shift in overall buyer enthusiasm in our market really kind of started in the middle of 2022, we're about 3 or 3.5 years into a downward shift. And typically, that part of a real estate sales cycle lasts about 3 to 4 years. What I think we're going to be able to do is look at 2024 and 2025 and say, that was our bottom. And what we're hoping is that 2026 represents an incremental, if not slightly positive change in an upward cycle trajectory. So what does this mean for you? If you're looking to make a move in 2026, rest assured that our industry experts believe that brighter days are ahead. If you're a buyer here in Houston, Texas, the news is wonderful. You have more choice available to you right now than at any time on record. And if you're a seller, make sure to keep that in mind. Buyers do have more choice, so it's imperative that you listen to your friendly neighborhood realtor and make the right decision on pricing, condition, and marketing so that you can have the best success when you choose to take your home to the market. If you're thinking about moving to the West Houston area, make sure to reach out to me with my phone number and email listed below. And if you found value in the content that we put out today, make sure to click the link below and subscribe, because we put videos like this out every single week. See you soon.